Welcome back to the Deep Dive. Today we are tackling a universal financial frustration: international money transfers. Remittances. If you've ever had to send money to family abroad or, pay a foreign bill, you know the feeling. You go to click send, you see that upfront fee, and you think, okay, that hurts, but I can live with it. But then the money lands, and the amount is mysteriously lower than you thought. That feeling that you're just throwing cash away, it's very real.
It is absolutely real. And the reason you feel that way is because the whole system is designed to be confusing. So our mission for you today is pretty simple. We want to give you a shortcut to becoming a savvy remitter. Because we've looked at all the data, and the central insight is this: the biggest cost is almost never that fee you see up front. The real cost is hidden. It's baked right into the exchange rate.
And we have really dissected this. We've got detailed service comparisons, real-world expat experiences, a look at niche players like crypto, even warnings about using your card abroad. And most importantly, we are using hard data. Global pricing trends straight from the World Bank's Q1 2025 report. By the time we're done, you'll really understand the math of moving money across borders.
Okay, so let's jump straight to the source of the problem, because this one mistake costs consumers billions. Globally.
Billions.
I mean, if you were still relying on your traditional bank for an international wire transfer, you really need to pay attention. The World Bank's latest data shows that banks are, by far, the most expensive way to send money. They hit an average total cost of around 14.5%.
Wait, hold on. 14.5%. That's not a fee. That's a tax. So you're telling me if I send $1,000 through my bank, $145 of that just vanishes.
Yeah.
How are they still getting away with that for a transaction that's mostly automated now?
They get away with it because of convenience. And because they rely on most people not comparing the exchange rate. You have to understand the two ways they charge you. First, there's that visible upfront fee, the $5, the $20, whatever it is. But second, there's the invisible cost, the foreign exchange margin, the FX margin.
And that FX margin is where the real trick happens, isn't it?
Precisely. I mean, the key lesson here is that so many services, especially the big banks, will boast about low or no transfer fees. But they just hide the cost by marking up the exchange rate. To really compare them, you have to know something called the mid-market rate.
Okay, let's define that for everyone. What exactly is the mid-market rate?
Think of it as the wholesale price of currency. It's the rate banks use when they trade money between themselves. It's the true published interbank rate. No markup. So if a provider uses that rate, you're getting the fairest deal possible. Any rate below that means they're taking a profit.
All right, let's make this real. You've got a detailed comparison from our sources. Sending $5,000 to the Philippines. What did you find?
Okay, so for this example, the mid-market rate was 58.8855 pesos to the dollar. We looked at three services. First, Wise. They're a digital player who commits to using that mid-market rate. They charged a totally transparent transfer fee of $28.95, and their FX fee, $0. So total cost was $28.95.
Okay, pretty straightforward. They charge for the service, but the rate is clean.
Correct. Now look at XE. They charged a transfer fee of $0, which sounds better, right?
Well, that sounds free.
But their exchange rate was marked down by just 0.6% from the mid-market rate. That tiny little adjustment resulted in a hidden FX fee of $30.18. So the total cost was actually higher than Wise, but it was hidden in the rate.
That structural difference is everything. But you said there was one provider where this FX markup really gets you.
And that brings us to Remitly in this specific scenario. They also advertised a $0 transfer fee, looked amazing up front, but their FX markup was so significant the total cost came out to $101.85. So when you see that difference, $28.95 versus $101.85, you realize the FX trap just cost you over $70. All while they're both claiming to be free transfers. That is the $70 mistake right there.
Okay, so that should be the core takeaway right now. The exchange rate, not the fee, is the true cost. And this trap isn't just for big international transfers. It gets you when you travel, too. We have to talk about something called dynamic currency conversion, or DCC.
It's the exact same hidden cost just applied to your daily purchases.
Yeah.
Let's say you're using your credit card abroad, maybe buying a coffee in Manila. The payment machine pops up and asks, do you want to pay in the local currency, PHP, or your home currency, USD?
And every tourist thinks, oh, I'll pay in USD, so I know exactly what I'm spending.
Which is precisely what you should not do. You must always choose the merchant's local currency. When you pay in your home currency, you're letting the merchant's card processor do the conversion for you, and they charge you a massive hidden markup for that service. you end up paying way more.
So the rule is, when you're abroad, always think local currency, not home currency.
Exactly. Defeat the hidden margin.
Okay, so we know how they charge us. Now let's figure out which money transfer organizations are actually worth using. Because like you said, there's no single best provider for everyone. It all depends on the amount, the speed, and how the other person needs to get the money.
Right, so we should probably segment this based on what you need most.
Let's start with the big one, pure cost. For people sending money home to family every month.
If cost is your absolute priority, Wise consistently comes out on top. And it's because they stick to that mid-market rate. The World Bank actually tracks this with an indicator they call SMART, the Smart Remitter Target. It measures the average cost of the 3 cheapest services available. And globally, that SMART average for a $200 transfer is about 3.29%.
3.29, compared to the bank average of 14.5%.
It shows you just how much money is left on the table if you don't shop around.
That's a huge gap. It proves the system rewards you for being informed. But what about speed and large transfers? Say I'm buying property or there's an emergency. Who wins there?
Wise still stands out here. It is consistently the fastest digital option. For that U.S. to Philippines route, transfers are instant to 2 days. And globally, something like 95% of their transfers are done in under 24 hours. And crucially, for big transactions, they support transfers up to $1 million per wire. So it's perfect for things like real estate.
How does that compare to, say, the old school banking system? We hear about the SWIFT network all the time.
The SWIFT network is basically a secure messaging system for banks. It's reliable, but it is slow. A SWIFT transfer can take 3 to 5 business days. The digital guys, like Wise and Remitly, they get around that by using their own local bank accounts, which cuts out a lot of that delay. Even other digital players can be slower. Western Union bank-to-bank can be 1 to 4 days, Remitly 3 to 5. Digital is just faster.
So if Wise is so much cheaper and faster, why are people still using Remitly in Western Union?
Right.
It used to be cash pickup, right?
That is exactly it. If your recipient doesn't have a bank account or they need physical cash right away, services like Remitly are essential. Wise just doesn't support cash pickup in a lot of key remittance countries. But that convenience costs you. Remitly charges around $4 for cash pickup, and they often use these low, flat fees like $1.99, which can actually be worse for really small transfers. But the real killer is the exchange rate. Remitly offers a much worse rate for transfers under $500. It's a classic trap.
So you really have to do the math every single time. Let's talk about another big one people use just out of habit. PayPal. We looked at an example sending £2,000 from the UK to euros. How did that stack up?
This is the perfect example of convenience costing you a lot of money. So Wise had a slightly higher upfront fee, about £7. PayPal's fee was only about £3.
So PayPal looks cheaper.
It looks cheaper, but Wise used the mid-market rate. PayPal used a heavily marked up rate. That's their business model. And the result was huge. The recipient got 2,370 euros with Wise. With PayPal, they only got 2,260.
That's over 100 euros lost on a £2,000 transfer, all for saving £4 on the upfront fee. Wow. That completely demolishes the low fee argument.
It does. That convenience of just linking your PayPal account is very expensive.
Okay, let's switch gears to the niche player, cryptocurrency. For the crypto native folks out there, does this whole system even matter? We hear that costs can be incredibly low, like $1 a transfer with a Lightning Network.
The appeal is absolutely the low cost, but the complexity and the risk are really substantial. For a normal remittance, it's a high-effort solution. The process can be a total nightmare for, a family member who isn't tech-savvy.
Can you just break down the steps for us?
Sure. First, you have to convert your local money, say euros, into crypto, like Bitcoin. Second, you have to choose the platform, Binance, Coinbase, whatever. Third, you have to pass KYC verification.
Which, for clarity, is know your customer. It's the mandatory ID check for anti-money laundering.
Exactly. Fourth, you buy the coin. Fifth, and this is the really hard part, the recipient has to use a peer-to-peer platform to cash that crypto out. If they're not tech-savvy, that introduces huge scam risks. And the whole thing is subject to crypto's insane volatility. It's high effort, high risk, not a simple solution for most people.
Right. It sounds like the effort and risk still outweigh the low cost for now. So beyond picking the wrong provider, What are the big behavioral mistakes that people keep making?
We've talked a lot about comparing rates, but two simple logistical mistakes cause huge delays. First, just entering the wrong recipient details. A misspelled name, one wrong digit in an account number, that requires manual intervention, paperwork, and serious delays.
I can just imagine the customer service call trying to fix a typo on an international wire.
It's brutal. Second, ignoring the timing. FX rates fluctuate constantly. If you transfer late on a Friday, your money just sits there until Monday. You could miss a much better exchange rate. And finally, a simple one. Use the cheapest way to fund the transfer. Using a credit card almost always costs more in fees than a simple bank transfer.
Okay, let's pull back and look at the big picture with that World Bank data. You said the global average cost is actually moving further away from that UN goal of 3%.
It is. The global average actually went up a tiny bit to 6.49% in Q1 2025. And the disparity between regions is stark. Sending money to South Asia is the cheapest, at about 4.8%. But sending to Sub-Saharan Africa is the most expensive at 8.78%.
That's a 4 percentage point difference. And what about the big sending countries, the G20? Where is it most expensive to be sending money from?
South Africa is an extreme outlier. It is the costliest G20 country to send money from. The average cost is an astonishing 15.23% for a $200 transfer. Brazil is next at almost 10%.
15% from South Africa. That's almost the same as the average cost of using a traditional bank.
Yeah.
Why is it such an outlier?
It's usually a mix of things. Complex regulations, a lack of competition in the market. It just allows the existing players to keep those high fees. By contrast, the cheapest G20 countries to send from are Australia and France. Both are around 5%. So the difference between sending from South Africa versus Australia is a full 10 percentage points.
Wow. So where you live can determine a huge part of your costs. Let's end on the methods. What's the cheapest way to fund and receive a transfer now?
Well, digitally is winning. The cheapest way to fund a transfer globally is with mobile money at about 3.6%. On the receiving end, an emerging method is actually cheapest, debit card pickup at 3.4%. That's followed by mobile wallets and then cash pickup. Digital channels are definitely forcing costs down. So, to summarize the key learning from all this, cost optimization comes down to total transparency. You have to focus on the exchange rate. Choose providers like Wise that use the mid-market rate, or at least have verifiably low markups. And second, match the provider to your need. A flat fee isn't always better. Convenience is almost always the enemy of savings.
And even though the global average cost went up a bit, the digital-only players, the ones we've been talking about, their average cost is consistently lower. It's about 3.55%. So the tools are there for you to bypass that expensive old system.
Exactly. And this leads to our final thought for you to mull over. Given that traditional banks are still, by far, the most expensive providers at an average cost of 14.5%, if you're still using your bank for international transfers, how much money are you just giving away for the sake of convenience? It could be hundreds, maybe even thousands of dollars every single year. Go look up the mid-market rate before your next transfer. Just see the difference for yourself.